The Reserve Bank's Monetary Policy Committee will this afternoon announce its decision on interest rates. It's widely expected that it will increase the repo rate by 25 basis points. This is as inflation remains a key concern in the short to medium term, with higher global oil prices and locally higher electricity prices amongst other factors fueling it. A 25 basis points hike will push the repo rate to 4% and the prime lending rate to 7.5%. Economists are warning this is possibly just the beginning of the higher interest rates for South Africans.
Given what the Federal Open Market Committee last night decided, and of course they met after hours, after South African markets closed, they decided to quicken their tapering and likely bring forward an interest rate hike to March. There's a high risk that the Reserve Bank might hike interest rates by 25 basis points today. In fact, we've been seeing inflation rise around the world, but also in South Africa. And of course, as we go into February now, we are expected to see an increase in the petrol price, and of course that could be above R1.50 a litre. All of this adds to inflation. It pushes up the base from which inflation is calculated for this year, and of course if the Reserve Bank targeting inflation in a 6 to 24 month period, but particularly in a 12 to 18 month period, they'll be looking to see if their inflation forecasts have changed or not. We believe there is a risk that South Africa sees its interest rate hiked by 25 basis points, and of course if this occurs, it'll be helpful to the rand but not to consumers in South Africa. However, as the United States moves into an interest rate hike cycle as early as March potentially, South Africa could obviously see a situation where we see continuous interest rate hike increases this year as well. Indeed, the money market curve is priced in up to 2% rise in interest rates this year. That's 8 to 25 basis point hikes. Of course, there are not that many meetings this year from the MPC, so it'll either mean more than a 25 basis point hike at a meeting, or else, of course, a situation where we don't see, and this is what we think is more likely, as many interest rate hikes materialize this year as the money markets are currently pricing in. We think that we could potentially see 3 interest rate hikes of 25 basis points this year, but of course there's a risk of 4, if not more.
With the decision on the interest rate hike taking place this afternoon, we're joined by Marcél, who's the CEO of Leadhome, on the impact of the rate decision on buyers, homeowners, and the general property market. Marcél, thank you so much for your time. Before we get into the actual impact, let's talk about your assessment of South Africa's property market, especially over the past couple of years when you look at it pre-pandemic versus now.
Thanks for your time. South Africa's property market has certainly rebounded. During the course of the pandemic, in sort of April 2020, we went through a massive slump with no transactions happening. But since then, the property market has been incredibly buoyant, fueled by lower interest hikes and change in lifestyle as people have moved to working from home and they need more space, fiber internet, etc. So we've seen a very buoyant property market. It's sort of slowly come back, or it came back quite aggressively in June, and there's been a slow uptick. And at the moment, based on our live data, we are experiencing the same level of activity in this month, in January 2022, that we had in January 2020. So a significant increase in the property market certainly has rebounded very nicely.
What does buyer interest look like, given the already, increased rate cycle that we could find ourselves, and what can we expect in the case of expected interest rate hikes? I mean, I'm sure as you pay attention to some of the local news events, even international, a lot of central banks are moving into, interest hiking cycles. What does that mean for buyers?
Well, obviously for buyers, the immediate impact is you are going to pay a little bit more for your loan, given the 25% basis point hike that we're seeing. On a R1 million loan, you're going to pay around 150 Rand more per month to repay that loan. We don't think that that's going to have a huge impact on the South African market. The people who are buying properties at the moment really are the middle and emerging class, and 150 Rand a month we don't see is going to have a huge impact, especially given we came from a prime interest rate of 10% prior to COVID. So we're still very much net positive when we look at the interest rates pre-COVID versus post-COVID. I don't think we're going to see a huge increase. I do think the biggest impact is South Africans' perception about South Africa, what we see in the media and the state of the government, and that is going to be the single biggest driver. But what we have seen is that the home as an asset has increased in importance over the course of the last 2 years as a result of COVID, and we don't believe a 25% basis hike is going to have a huge impact on that. We expect a very buoyant property market to continue. However, sellers will always need to be realistic about the price. We're not in a seller's market. We still are very much in a buyer's market where buyers have got the ability to negotiate really good prices.
What have you seen in terms of the confidence of banks to grant loans in this environment?
Confidence has come back. Again, our data shows that for the second half of last year, banks issued loans at a higher rate at or below prime versus the first half of last year. What that means in effect is banks' confidence has increased in the stability of the workforce to repay that loans. I think that's a really positive sign. A lot of the stress of business has now been taken out. I think the businesses that weren't going to make it probably haven't made it now. And that means that banks are taking a view to say people who are applying for jobs, there's a higher certainty that they will continue in those jobs, they will grow their earnings, and that you can see in the numbers with banks issuing a higher proportional number of loans at or below prime compared to the first half of last year. So there's definitely confidence from the banks.
I know in your first response, we spoke about what you're seeing in the property market pre versus now in terms of the pandemic. What are you seeing when it comes to demand versus supply, buyers and sellers in this particular environment?
Yeah, supply is still outpacing demand. What that means is there's more properties on the market than there are buyers to buy it. And when that happens, you're always going to have a price difference. You are unlikely to see a significant movement of the listing or asking price versus selling price. In our data, we look at around 96%. That's the sort of the average achievement selling price versus asking price that we've achieved for our clients at Leadhome over the course of the last 3 years. That's actually gone up over the course of the last month. In December and January to date, we're actually sitting at 97%, which means that the sellers are realizing a little bit more than they would have previously for their property, but still the number of buyers and the number of buyers who can actually afford mortgages are still lower than the amount of sellers out there, and therefore there's an oversupply, which means it's still a buyer's market.
Marcél, let's leave it there. Thank you so much for your time. That is Marcél du Toit, is the CEO of Leadhome, giving us his perspective of what interest rate hikes could mean for the property market.